also long-term mindset. So I think Warren Buffett, he really executes on what he preaches, which is long-term investing. He's really not very active at all with his investments. So just like us, we want to stay long-term oriented. Like in the seminar, for instance, like if you miss the top 10 business days or trading days, for instance, like how much do you miss out on?
Oh, it's nuts. You go from an 8% annual return down to a negative rate of return if you miss the top 40 days. If you miss the top 10 days, it goes from 8% down to 3%. So it's wild. Welcome to the show. This is the Build Big, Live Bigger podcast. This is where you get real clarity about retirement so you can build a plan that blesses your life instead of becoming it. We'll share what you need to hear to replace worry with confidence, protect what you've built, and actually live your dreams, not your fears in retirement. Let's dive in. Welcome to episode 30 of the Build Big, Live Bigger podcast. My name is Jonathan Burgess. I'm joined here by Luke Grimes, my financial advisor.
He's not lying.
Yeah, as of late, I just gave, Luke's tossing some coin around for me. Can we call it that? I would love if somebody came into the office and they were like, yeah, I got a little coin. Can you just toss a little coin around for me?
That's a fun way of putting it, I guess. But
yeah, it'd be definitely somebody in the generation of folks we work with. I mean, people are listening right now and they have no earthly idea what I'm talking about. But hey, that's half the battle. And when you retire, you don't want your guy to be so old that he looks like he might retire before you, You want your guy to last you to and through retirement. So if we're talking about tossing coin around, get with the times.
Yeah, totally.
All right, we're getting down to business. We're talking about Berkshire Hathaway. Luke, you're going to the Berkshire Hathaway Annual Meeting. When?
It's actually Thursday the 30th of this month. So I'm super excited. That's going to be like a 4 or 5 day experience for me. I've gone a couple times before, but I'm going to be there at around that time, the end of this month, going into May. So it's always the first weekend of May. And it's going to be a whole lot of fun. Like we talk about it in our dinner seminars about how 40,000 people are really some of the smartest business owners, money managers, people in this industry that are interested in finances and growing their money. It's just a place for all of those people to come together. And so it's really cool. People from all over the world come. I'll meet people from Europe, New Zealand, Australia, all over the world. So it's pretty awesome.
How did the ticket packages work for that?
If you are a shareholder, you have a right to go and you get up to 4 tickets. So you can bring 3 friends if you want to. So you have to actually order your credentials online. So I have mine shipped to me. So yeah, I'm excited.
Are you taking anybody with you?
No one else really wants to go. That's a good friend of mine that wants to go. I usually ask people, do you want to go? And they're like, oh, it's just, I don't know if it's of enough interest for me.
He never asked me.
I asked you last year, didn't I?
Yeah.
But I should have asked me this year. I should have asked you this
I'll go.
Okay.
I'll go.
You should come along, seriously.
How far is Omaha from here? How long of a flight is it?
I think it's just like a couple hours flight.
Okay.
Really, it's not too bad.
Nice.
So yeah, we'll get you in. If you want to come along, let's do it.
I don't know. I didn't shake his hand. It was a 5th month, so we may or may not.
Oh, okay.
It depends.
I got if you want to go, I think it's a worthy experience.
Yeah. That's what we all say, right? We got to talk to the wife.
Talk to the boss.
Yeah. So, walk us through what a Berkshire meeting looks like and what are some of the key takeaways you've had as you've gone in the past couple of years.
So, I'll be going on Thursday the 30th. That's just to have enough time to get acclimated, find the Airbnb, get travel all situated, etc. But there's a bunch of events that go on outside of and around the event itself because it's the biggest investor-oriented event in the world. Like by far, like 50,000 people come to Omaha, which is where Warren Buffett is from, and they just like experience the area. They go to the events. So there's a bunch of events that crop up around the core event. So you'll have like Bill Ackman speaking maybe a couple days before, or like a couple other investment companies or advisors speaking at different events. You'll have different groups and clubs that'll crop up around the core event, which is on Saturday. So Saturday, doors open at 7. Usually the line will be massive by 5 in the morning.
Oh my gosh.
Yeah. So you need to have your credential, otherwise you need to go and get it, and then you go to the back of the line, which last year, that was the longest line I've ever been in times 10. Like, it was literally like across the town.
Oh my gosh.
Yeah, it was crazy.
So where did you guys end up sitting?
So last year I didn't organize myself very well. I should have gotten the credentials. I got it the first time I went, no problem. But this last time I went, I just thought, oh, I'll be fine. And so I went there, I got in line, but I had to get in line to get the credential. And then I had to go to the back of the actual line.
Oh my gosh.
So I'm like, okay, that wasn't a good move by me. So I learned my lesson.
Season. You got a little bit of experience.
Yeah.
And you got your credentials shipped to you.
Yeah.
It sounds very legitimate. Is it like a badge?
It's a lanyard. Little what are the little?
Did they
tag
4 lanyards?
Or
just one?
So there's multiple ways you can do it. You can actually submit the form directly to Berkshire Hathaway, and they'll send it out to you. Or if you prove your like ownership, you can get it through other means. I only got one.
Okay.
This time. The first time I went, I got 4, and I was like asking everyone, does anyone want to go? But no one had enough interest in going. So I'm like, okay, I'll report on it.
So I want to know what are some of your key takeaways from the days?
There's like almost an unlimited amount of wisdom that I've gotten out of these events. Like, I actually they've been publicized and videoed, and they're on YouTube since.
But you don't get the same feeling
no.
if you're in the room. It's different when you're in the room.
It's not the same experience. Like last year I went, and it was a surprise that Warren Buffett announced his retirement, and that was at the very end of like the whole day event, and everyone was taken by surprise. And then the entire stadium like stood up and gave him like the biggest round of applause, standing ovation that I've ever been a part of. And the energy was just incredible, and you could not replicate that watching online.
Yeah. Oh, that is awesome.
Yeah.
So give us some investment takeaways that you've had from these.
So there's honestly so much to, like, I couldn't even scratch the surface, but some of the core things that I guess he preaches and that that community kind of builds is really looking at fundamental investment research on the companies or the investments, putting solid time into really finding the right investments.
What do you mean by fundamental analysis?
Like if you're investing in stocks specifically, looking at the companies themselves as a company, how high quality is that company? Do they have a really strong competitive advantage, and can that last and grow for a long period of time? Like Apple, for instance. They've been a huge leader in their technology for a long time.
$200 billion in cash.
Yeah, that's a great problem. And so things like that, putting a lot of time into that.
That's a ton of cash, by the way.
It's huge. And also long-term mindset.
Mm-hmm.
So I think Warren Buffett, he's one of the people that really does, he really executes on what he preaches, which is long-term investing.
Mm-hmm.
He's really not very active at all with his investments. So just like us, we want to stay long-term oriented.
Mm-hmm.
Like in the seminar, for instance, like if you miss the top 10 business days or trading days, for instance, like how much do you miss out on?
Oh, it's nuts. You go from an 8% annual return down to a negative rate of return if you miss the top 40 days. If you miss the top 10 days, it goes from 8% down to 3%.
Mm-hmm.
So it's wild.
Yeah, it's crazy. So staying long-term oriented and just staying put in, as long as you know they're high quality investments and are really going to stand the test of time, high quality. And that's the key.
What would be some indicators of something like as you're doing a fundamental analysis to tell if it's high quality versus low quality?
Well, it depends on what type of investment we're talking about, but like, let's just
talk about stock.
Let's talk about a stock.
Yeah.
I have a list of like 65 questions before I make an investment. Like it's actually like
65.
Yeah. It's a screener.
It couldn't have been 6.
No, 65. So it's like, so I do all of my research on the stuff that's much more obvious to me. And then it's like a circuit breaker on like, okay, if this is an obvious no, okay, next. Let's go to the next idea. But yes, if we're talking stocks, I mean, the most important thing, which is what I've learned from, well, some of the most important things I've learned from some of the best investment books like Intelligent Investor by Benjamin Graham, Peter Lynch's books as well, is long-term mindset. And if it's a high-quality business, which is much more what I would prefer, obviously, we would much rather own an Amazon or an Apple or a Costco versus Joe's Taxes, or Joe's Pizza. I don't know.
Joe's Taxes or pizza, I don't know. It depends.
Yeah. It really depends. I'd much rather
understand what you're saying though. Yeah.
I'd much rather a high quality company that's proven itself with a strong track record.
If retirement clarity matters to you, don't wait. Text BOOK to 864-920-3155 or click the link in the description below to get a free copy of Jonathan's book, Retire Right.
That's the most important thing, is the strong track record.
And then you go through the circuit breaker.
Yep.
So what are some of the questions on your circuit breaker?
Well, most people don't really have to worry about this kind of thing. That's why you hire people like us that actually like enjoy like making sure, like doing all the research. That's something that I love to do. So you don't need to worry. But yes, under the hood, if you're looking for high quality stocks that we do include in our portfolios from time to time, things like not being massively overloaded with debt. Like if you made just the slightest mistake and you have all this money due and you can't pay it, I mean, that's just not a good recipe.
Yeah.
And they're beholden to those creditors. So debt issues, that's never been a problem with my companies that I've owned. They've always been in a net cash position.
Yeah.
So that's kind of like how you want to run. You wouldn't want to, borrow a bunch of money.
Yeah.
Yeah. And like base your business on that,
Yeah, I agree. All right, give me another takeaway. Give me another Berkshire takeaway.
Sure. Long-term track record of these companies. Usually there's qualitative and quantitative ways to look at an investment.
Okay.
Qualitative is really how good the business is, but it's really hard to it's like looking at how high quality is management, how high quality is the culture, how high quality is their discipline with their finances, and how good is their product compared to competitors.
Okay.
All of those things. So that can be, in a way, that can be filtered down into the qualitative, which is the quantitative, to actually see the real track record that has built. So that can be a real solid indicator of how good the qualitative is.
Yeah.
Looking at a long, good track record of profitability, not losing a bunch of money.
So using and this is not a recommendation to buy or sell a security. So I need to be careful here.
Yeah.
But like, what's one stock buy that you've made recently based on the advice that you've gotten at these Berkshire meetings, and why did you buy it?
Yeah, sure. So again, to preface, this is not investment advice.
Hold on a second. I'm pulling up my brokerage account right now. I'm going to buy it.
We're not. This is not investment advice. This is what's going on with me. This is what my research has led me to.
Yeah, we don't know your financial situation,
and this actually is part of a portfolio that we've built in house now. But one of the ideas that I've had recently is Adobe, for instance. It is a tech-oriented company, high-tech company.
Yep.
It's been around for 40 years. Great track record, like constantly growing revenues and earnings and profits and all of that. Great indicator of success. But looking at all of their products and their platforms, opportunities will come around every now and then because people are worried about something. It might be a short-term worry. And so what's happening right now with AI, it's a hot topic. Everyone's wanting to get on the right AI companies and get away from anything else that's not the hot AI companies. But it's very high level and general. And so the market gets scared about a big cohort of companies that they think are going to lose or, are going to be diluted from this AI competition or developments. It's so hard to tell what's going to happen. But when you look closely at certain companies, it could be Salesforce or it could be Adobe. Adobe, for instance, is using AI to maintain their status as the best at what they do, to improve their platform. So instead of AI eating their lunch and like kind of, people are not going to leave to go to some AI platform. They're going to stay on Adobe because Adobe is already the best at doing what it does with all of the AI applications integrated. Like even when you're using their products, you can literally go to a drop down and it'll have all of the leading AI models to choose from.
Huh.
Why would I go anywhere else when literally it's all there?
Yeah.
So those all are the factors. Like people are worried that the company's there's a possibility it could go away, it could be disrupted massively, but based on their track record of innovation and doing things like this.
And it sounds like if you were going to buy them, you would also look at their debt. And so they must not have a lot in debt.
They have a net cash position. So they have debt, but they have more cash on hand than debt. So they could cover it all today.
Yeah.
Not bat an eye. And they have like a 30% plus profit margin and have for a long time. They've grown consistently.
Yeah.
No type of disruption has shown in their financials in any way. And so, yeah, I mean, it depends on how deep you want to go into the idea, the thesis. This is what I would talk about all day if I could.
Yeah, but there's an opportunity in the market. So like something selling at a discount relative to what it's been worth in the past, and it should really leapfrog or pass its previous valuation based on the speed at which they can innovate now with AI.
Yes. Yeah, essentially. Like in the past.
By the way, again, not a recommendation to buy Adobe.
Yeah.
I mean, I think we've said it 5 times.
Yeah. This is just for instance, this is something that I'm looking into and doing personally. It's not advice. But for instance, in the past, their profits, the company has been valued at 30 times profits typically. Right now it's valued at 12 times profits. Way less than usual because people are worried.
Yeah.
So if that fear eventually clears through as being overblown in the next couple of years, that could re-rate to a more normalized price of maybe around 20 times.
That's awesome.
So
if we have a listener in there, an engineer, there's somebody who wants to learn more, what's a good foundational book that you read that helped you identify some of these things for people to become a better investor?
Yeah, sure. So I'm like starting from the ground up. Probably it can, I guess, come across as dry, but it's probably the most core book when it comes to principles. Not all technicals, but principles, is The Intelligent Investor. And that was written by Benjamin Graham, who was Warren Buffett's idol. Warren Buffett actually went to work for him, like right out of college, for a while. So that was the person he looked up to the most because of how good this book was.
Awesome. All right. We're going to leave people with a short one today. Luke, thank you.
Oh, all right.
Yeah. Appreciate your time. I know you got clients coming in later. We got things going on today. So wanted to pop in, give some nuggets and, catch us on the next one. If you're listening to this, we appreciate you listening in. And as always, have that white belt mentality. You're in the right place. You're learning the right things. Just takes time. So have a great day, great week, great night, great morning, wherever we're catching you. Make it great. We'll see you on the next one.